Good morning, ladies and gentlemen, boys and girls. Welcome back. Excuse me. Yeah, sorry I haven't been on the past, I don't even know how many days, maybe weeks now. Again, like I said, just a really busy time in my life. Don't really have time to be online like I'd like. Heck, I have people starting some work here in the house tomorrow, so it could be really loud with some construction going on in the house starting tomorrow throughout all of this week. So I don't know, we'll see. But next couple weeks we'll be able to be online consistently, so that will be good. But like I said, we're just kind of tearing apart this house. Hammers and nailers are going, so just not the most conducive environment for streaming. But nonetheless, let's get into it. So SPX as maybe, well, maybe we'll, guess we could look at either or for the moment. SPY is fine. So yeah, if you look at the S&P 500 this morning, it is down below the 50 SMA. It's actually dropped below the 50 SMA. Maybe that was like on Friday's trading action, or is that Wednesday of last week? Yeah. Looks like Wednesday of last week we took out the 50 SMA on the S&P 500, which pretty much just means the market went to a bearish to negative territory last Wednesday. So anybody that follows the S&P 500 system as we do here on this streamer, well, just me in general, yeah, you'd be leaned to the negative to bearish neutral environment starting Wednesday. And now, obviously, since then, the market has dropped, put in a lower high, and rolled over, etc. So for the moment, the market is not swing long. I am not swing long. When the market turns back to positive, we will look to put on positions in the long bias direction, but that's not right now. But we'll get there, right? Just give it some time. Silver, gold, well, both of them, but gold more than silver, or silver more than gold. But anyways, silver hit our price target into the hundreds, 109s, 110s, hit +3 standard deviation, got wrecked as per usual. So essentially silver ran directly into our price target and then topped exactly where we'd said it would probably top. So I would say the precious metals / silver market is pretty much doing everything it should do to a degree. We can put that on real quick. 1 second. I'm going to use a TradingView version of standard deviation. I actually helped design this. We'll help create this one with some dude back in the day. But nonetheless, here we go. So here's silver. If you look at silver, well, this is SLV, the ETF, but you guys get the point. So anyway, silver, ETF, right, SLV, you'll see ran, ready? All the way up into, this is the 0 line, so that would be what we call 0. This would be 1, this would be 2, this would be 3, and this would be 4. All right, so silver ran to 1, 2, 3, not quite 4, but 3, and then topped out. And if I were to zoom in on silver here a little closer, you will see, I mean, it pretty much happened almost perfectly. Right, so if you look at silver and you look at the standard deviation price point, it was at, well, this version on TradingView. It's a little different on Thinkorswim, where I use it as well, but the exact pricing here was $108.38, right? On the TradingView version, that is. And yeah, so if we were to go look at silver on, say, like a 30-minute chart or something, you will see that that is where the +3, so this would be your +3 standard deviation mark, right? So silver runs all the way up into what we would categorize is extremely overbought statistical pricing, +3, top, down, right? And I think this drop was something like 25%, maybe 30%. I don't know, I kind of forget. But I mean, I could measure it. It would take 2 seconds. Okay, I'll measure it. Fine, 2 seconds. But yeah, so let's see. That drop was shit. Like 36%, 37%. That's rough. Yeah. Anyways, so basically, you were supposed to be selling silver on the way up into the +3, +4s, hoping to get the +4, as we pretty much suggested over the past couple weeks, taking profit, and now we're down 30%. So I would say what we saw on SLV silver just in general was, as we had mentioned some weeks back, a euphoric market. So very euphoric market. We could kind of see, was starting to see the euphoria movement. And when we see euphoric market moves, a lot of times price will run all the way into, as we just described, a +3 standard deviation move, at which point they usually will top and then get destroyed. Right? So what we pretty much just experienced and saw is what I would call a euphoric market run all the way to a +3, +4 standard deviation area, and then top out, which is honestly what we see happen all the time with euphoric market moves. It's a pretty standard market pattern that to a degree repeats. So yeah, what we saw is pretty normal in the euphoria world. Yeah, euphoric moves are not normal by any means because they don't happen that often. But in terms of what happens in the euphoric environments, that's pretty much what happens. So I would say SLV silver traded perfect as it relates to euphoric environments, and nothing that happened isn't legit. I think it all worked out pretty perfect there. So awesome for silver, or well, it's been an awesome move. And the short side, I mean, heck, that's pretty crazy. So nonetheless, that's that. We'll move into Bitcoin here. So Bitcoin down to 70, hit a low of what, 74,000 last night. So yeah, Bitcoin moving, trading, I would say perfect, honestly. So, you know, for the one person watching right now, you guys will know that for Bitcoin, we had mentioned it was going to peak in October of 2025, and it would then enter a bear market. So if we were to look at the chart, again, October was the peak in 2025. Since the peak in October, Bitcoin is now down about, well, hit a low, down 41%. So we've now shaved 41% of the Bitcoin price since the peak in October, and we still expect it's going to go lower. So yeah, we have Bitcoin getting down to as low as like the 50,000 areas. So we arguably have Bitcoin getting down in another, it'll be negative 60% there or so from the highs. So yeah, we're kind of expecting Bitcoin's still going to go even lower than this, and it's not ready to bottom yet. So any articles on the internet may be discussing bottoms for Bitcoin, or I don't really know what, you know, I have no idea like what the news would be saying about this drop. Not that it really matters, but you know that's the thing that's funny, is that, you know, in October of 2025 and 2 years before October of 2025, we had mentioned that the bull run would peak in October of 2025, right? So for someone like me who had kind of had some analysis built out for years ahead of time for Bitcoin, right, and then thinking it would peak in October of 2025, and then it did, which is even more crazy, and then see it go down 40%, it's like anytime news comes up, you just kind of laugh, because it's like, if 2 years ago we were thinking it would peak here and then go into a bear market, and then it does, how much does the news that's really going on even matter? Clearly it really doesn't, right? Because if it all happened anyways, it's like, was the news that came out this week really going to change the path that was set forth years ahead of time? Right. So nonetheless, we do think, really just me at this point, I do think And I think, well, we as in the market, I think the market is probably pricing in Bitcoin's going lower over the foreseeable future for the moment. So we'll stay on the path of Bitcoin going lower, even towards maybe 50s, 40s, thousands potentially if things really get shaky, before we even see some sort of meaningful temporary bottom to long-term bottom. So yeah, that's that. What else? Don't really know. All right, we'll take this back here. What we'll do is that gonna work? I mean, I guess I could do it like that. Yeah, I guess I could do it like that. That's fine. Yeah. So what we're gonna do here is we're gonna run through real quick, just kind of really all these small little penny stocks that are kind of moving here today, some that are on the scanners. But before we do that, let's look at the Russell 2000. So if we look at the Russell 2000 here this morning, we can see that the Russell 2000 is actually negative on trend, right? And it started a bearish trend, it looks like last Friday. Yeah. So about a week ago, the small cap market went into a bearish trading environment. So since then, not that you haven't seen penny stocks pop up, but they're more of the pop to short / pop to fade move. And that's because the penny stock market's in a bearish trend. So when the penny stock market goes back into a positive trend and moves in more of a bullish manner, that's where we're more likely to see the penny stocks go for pop to continuation moves as opposed to pop to fade. Because you wouldn't be then betting against the direction of the overall small cap market. So with that being said, some of the stocks that have popped up on the penny stock scanners this morning would be WATT, which is pretty much nothing. There's been this SWVL. Now, this started an uptrend at the price of $1.97, and then also started what I would call is a secondary breakout and uptrend at the price of $2.23. So pretty much, as long as this stock maintains over the price of one, $2.24, and B, $1.97, in theory, it remains in an uptrend. So we've essentially already had the first break and then go with this stock because it's, again, already happened. Now the support trends are 1 and 2. And as long as it's above those are 2 uptrend spots. So arguably something you could pay attention to over said prices, as mentioned, for the one person watching today. OPRA. That one's pretty much a no-go for me, mainly because this one was, so you can see it's had a nice move pre-market, but really this move is just an oversold bounce back to the mean or the market trend, right? So if you look at where the 30-minute SMA is at, it's priced at 1362. All right, and if you look at where the 4-hour trend is at, it's priced at 1357. And the market is coming from below back to up. So therefore, the market is not in an uptrend here with OPRA. The market was bearish, and now it's doing a oversold bounce back to the trend. So until it establishes an uptrend, there's really no more growth to be had there on that equity. So that's a no-go. NAMI, this just pretty much has absolutely no volume. So unless this just magically gets manipulated by the market, there's really not enough volume here to want to participate yet. That being said, it has started an uptrend. NAMI started an uptrend at the price of 60 cents this morning. So if you look at here on the right, you can see 60 cents priced here, up over. Next one, secondary 4-hour. So we started our first uptrend, went to our secondary uptrend, broke out, back test here. So this in theory is starting an uptrend, but there's just no volume. So again, that would be basically a no-go for the moment. This one, Again, literally a very low volume stock. Not that it can't appreciate in price, low volume. This was more of a, this is hard to say, it's kind of like a dip buy / breakout, but like I said, this one's just pretty much too extended from the breakouts and supports. It's too late, not enough volume. Meh. Fuse, interesting. Lots of volume. Again, the breakout here for this stock was all the way down at the price of $1.70 to $1.64. So unless you were watching it this morning at 6:50, 7 o'clock, and then got in on the back test, then in theory this one is your late, right? So your breakout was here. This would be your back test of support and your breakout. And so unless you got it there, you're essentially late. But it's got a lot of volume, so they might, at least perform some couple moves that you can make some money on with that guy. But meh. DKI, very similar, breakout 37 cents. So this happened, I think, in the after hours. Yeah, after hours breakout, meh. AQST. When did this start moving? 5 in the morning. Yeah, so this one had a breakout at about 5 in the morning, right over the price of $3.28 and the price of $3.23. So again, just another one where the breakout started at 6:33. You had to be buying into the pullback at 6:35 in the morning, or well, maybe that's 7:35. I think this platform set back an hour. I don't know why it's like that. I'm never gonna fix it. I'm too lazy. But anyways, that was at 7:35 maybe. Yeah, this thing's off an hour. So that was really at 7:35. But anyways, late. So as you can see, again, it's a lot of times what's going to happen is you have to be sitting watching the stock at the perfect moment. So like this one right here, you can see for the one person, if you're even paying attention, right? So this broke out over the price of what, 44 cents, right? So if you look at where this 4-hour SMA is at, right? So the 4-hour breakout that we watch and the 4-hour uptrend, it's right here, about 44 cents, right? So that's breaking out over 44 cents. And then there's the back test right there at 44 cents. Perfect back test right to the penny. If you look at it on a 1 minute, right? So what's a 1 minute look like, right? So there's your breakout, and then there's your back test. And then there's, heck, that was a bounce of 24% off support. So there was another one, like, you could have bought that. You could have traded this low volume, nothing, and still made 24% there on that bounce on support. But anyways, but that one's meh. Kind of, you know what I mean? It's just, ooh, this is kind of interesting. Well, maybe. It's got some movement. Breakout already started, obviously. So this would be down here. Wait, that's a 1 minute. That ain't right. Let's go back to the 4. Ooh, that's kind of interesting. Yeah, but it already did 1 and 2. This would be the one more likely to actually kind of go. And this one's got some potential. But anyway, so those are most of the stocks there, and the reasons why. Again, it's the same strategy extrapolated across every single thing. What was I supposed to do with that? Oh, it's supposed to go up there. Oh, you know what? We probably should look at the volatility index. I haven't actually done that. It's also 8:51, so we're getting closer to market open. I'm going to shrink this down just a bit. So let's look actually at the VVIX too. So VVIX is upsided, so that means people have been hedging for downside volatility. You look at the market, market's down, makes sense, okay? So obviously, let's take a look at the volatility index. So volatility index here is obviously over the 50 SMA. This morning it should be, why is that? Oh, did I change that? Must have. All right. Yeah, it would appear that the volatility index is up. So volatility index is up there. Let's check the 15 minute. 15 minutes maybe down. No, it's not. Okay, what about the 1 hour? 1 hour is up. Okay. All right, so looking at the volatility index this morning, essentially we are positive on the 30, 15, and hourly. So yeah, that pretty much means these are the supports, and those are the downside targets for the moment. So, got it. Yep, so essentially, with the volatility index breaking up, let me bring that back up, because for the one person that's watching, I would like for you to kind of maybe understand this. Which chart am I looking for? Is it this one? I think so. Yeah, so if you look here, the volatility index has a gap up, and basically that gap up, you could argue it hasn't really tested this 15-minute trend, maybe not the 30-minute. So essentially the VIX would have to just hold this gap up and then just keep going to prevent the market on the VIX from falling over to these simple moving average algorithmic backtest levels. So, right, so the options would be VIX just randomly goes up, or it goes for a backtest. Going for the back test is going to result in the VIX going down, volatility reducing in the market, and as a result, we would most likely then see the SPY bouncing, right? So, going to assume for the moment we're going to continue to bounce the market, pull the VIX back closer to those 15-minute trends for the time being. So like we said, even though the market is in a negative territory, neutral to bearish, we are doing a counter trend long within that neutral to bearish environment, right? So shorter terms for the moment are back to the upside. Areas of interest may be there. That SMA. What else we got here? 50 SMA is a little too high there. Interesting. I actually got to add something else here. Did that work? Yeah, there it goes. Paul to Timothy. Yeah, we covered silver for like a second earlier. Well, more than a second, but yeah, we covered gold and silver and pretty much. Yeah, so that just ran into the +3 standard deviation area, which is a very common pullback area, very common spot for the market to top at. Not sure if you're familiar with that work or those strategies, but yeah, so silver pretty much followed picture perfect euphoric market trading patterning. So yeah, it pretty much was expected that silver was going to top right about 100, 109, anywhere in the 115, 120s, because that's just kind of what tends to happen when they go through those euphoric runs and patterning. So yeah, you know. So the top is in for the moment for silver. Obviously, if you look at it, you could figure that one out. But yeah, so it's just topped out. Silver, yeah, that's pretty much it. Yeah, gold definitely didn't have as big of a pullback as silver did there, but obviously silver was a little bit more of the euphoric run there. And, you know, we did discuss that we thought that we would end up using the silver market's top to also top gold, which obviously has kind of happened. So I don't know. We'll see. There needs to be, just in general, I just think that a lot of the attention was on silver, and we were going to use silver's market's top as the metric to top the gold market as well. If we were to look at gold, actually that's kind of a decent discussion, but market's gonna open here in a wait. I'm tripping. Market's not gonna open here in a second. Funny. So yeah, we'll pull up gold for a second. Yeah, if you looked at gold, I'm just going to bring up GLD. Oh, I guess I could look at the futures, whatever. All right, so if you look at gold on a 1-year week scale, right? So if you look at gold, gold only got up to the price of, well, not only, but basically here, right? Which it did not get up to +3 or +4, right? But if you look at silver, right? If we go to, silver, right? Where did silver go? Silver ran straight into +3, right? And pulled back to the mean. So if you look at silver, right? Silver has effectively, actually, hold on one second. Yeah, I was gonna say, if you look at silver, silver's ran into the +3, right? So, if you think back to a couple weeks ago, we said, hey, we're probably going to run silver up into the +3, +4s, at which point we're going to then top silver, pull it back. You'll see we top silver, right? And it's already pulled back directly to the mean. So we've essentially taken silver on the year to overbought back down to the 1-year trading average, right? Within like a day's time. So we've already took it from a euphoric state back to a non-euphoric state, right, in a day's time. So, yeah, that's pretty much that. So, yeah, what else to say? Not much. We've covered, it's crazy, within 30 minutes we've covered the entire penny stock market, every single stock that's broken out, the entire precious metals market, the Bitcoin market, and the largest globally traded largest globally traded index market. That's something. And the market hasn't even opened. Would you look at that? So yeah, I'm pretty much just kind of sitting on the sidelines waiting for wait, why is that like that? Is that supposed to be there? Yeah, so I'm pretty much just kind of on the sideline, if you will, waiting for the next buy signal in the markets to add some longs, as per usual. 71's 82. Not bad. Yeah. Damn. The market is continuing up, well, kind of, but yeah, it's going up. That one's not bad, and not the bad. Oh, was so obvious. I kind of missed that a little bit. Well, did I? Maybe. 1 minute. Well, kind of, and then. Busy morning here, busy morning. I know. Yeah, just looking at this here. This is kind of our current pre-market trend support over under that box there. So also target area as well for pullbacks. Insurance. No, no GPM, right? That would make sense. Yep, so pretty much gone through most things here this morning. And pretty much have come to the conclusion we're kind of looking for the markets to bounce up for the time being. There are / were no. Interesting. Yeah, I would say there were no penny stocks that were specifically at breakout levels or break points that we could use. So essentially there's no limited or low risk entry points for any sort of plays that I saw on the penny stock market. And obviously we know that the Russell 2000 is negative right now, so that doesn't make that environment as easy to participate in for the time being. And we can't quite get back to, we're not swing long the market yet. That being said, did add or put in some purchases for our longer term portfolios this morning for our M1 account. So you could say our YouTube accounts. We have added some to the long side. Mainly just because the markets are on sale again this morning, right? So if you look at the market and you think about it in terms of uptrend, downtrend, right? So market would be on sale, market would not be on sale, right? Market broke down, market would be on sale, right? So the next time it does flip back trend positive, your position goes positive, right? Now, obviously, the risk of that is just the fact that if the market doesn't go back up, you're just buying into downtrends, obviously. But nonetheless, that's how you would lower your average over a longer period of time. But anyways. So yeah, we will pretty much wait for the next buy signal in the market as we normally do. We are not as bullish. We're pretty much not really very bullish silver or gold at this point. At this point, I would say we're more likely looking at sort of a distribution top on gold and silver, or some sort of local top on gold and silver. And we would be extremely lucky if gold and silver puts in a new high from here. I would say we'd be significantly more lucky. So that being said, I would be more on the neutral side of gold and silver to even bearish. As we mentioned, selling calls up into the hundreds, 120s, 115s, etc. is probably the play. That obviously worked. But yeah, now I would probably just be, what we'll probably see in the short term is a bounce. We'll probably see gold and silver bounce up off this move and then get sold into again. So we're not really bullish gold and silver anymore for the time being. Now, where is all the money going to move from gold and silver after that top? Or if it does top, that's the next good question. Where's the money going to move next? Don't know. But the money's got to go somewhere. That's a good question. Where would all the money go from gold and silver? Because as everyone liquidates, right, the money's going to go back. The money goes into their account, and then from there it's got to go somewhere because cash doesn't usually sit idle for too long. If it does sit idle, it's going to be going into a money market fund, short-term bills. But if it doesn't go into money market, short-term bills, getting interest, then where would someone move money from the liquidation of gold and silver? If it was, and that's another interesting question because generally speaking, if it's a Peter Schiff kind of guy, then assuming they wouldn't really be selling, so they would just keep holding, right? You know what I mean? So to predict the investor psychology of like a gold bug, that would be maybe a little more challenging than that of someone who is more of a portfolio, manager, because money's got to go somewhere, right? So if you'd made a bunch of money on gold and silver, where would you move your money to next? Which I've asked the question to myself already, and that's kind of a tricky one because the reason you're in gold and silver these days is because it's the hedge against dollar or de-dollarization, and just maybe somewhat of a change in the world order and the way currencies work for some time, right? So if you were in it, which puts you in gold and silver for conservative, safe, tailwind risk reasons. So if those risks are still there, then what would the psychology of an investor like that be? That's the questions I've been asking myself over the past weeks. I mean, even myself. I mean, I'm the same thing, right? I did it myself. I'm taking some money out of the gold and silver markets on these runs, not because I think that, you know, I think there could be more de-dollarization. I think we could have some debt problems. So is it like, did I take off gold and silver too early? Um, in my opinion, like yes and no. Like there might be more to gold and silver, but I know I've timed the top pretty much perfectly, right? For the moment, at least. I could be proven wrong, and if I am, I still own some. But if I'm right, then what more can you get from the market over the next how long? I don't know, right? So I took money out of gold and silver, and I went conservative on equities, right? So I went with more of with yeah, I went conservative. I went defensive. So I was already defensive, and then just moved money from a defensive play to another defensive play, right? So that's what I'm getting at is that anyone who's been invested in gold and silver for a long time looks at this run, and you either have to ask yourself, is it time to, investing is about making money, but if you're investing in gold and silver, you really care more about the gold and silver than you do the paper dollars, right? That's why I didn't take paper dollars to hold on to paper dollars. I took the paper dollar gain to move it into somewhere else where I figured there might be more gain for paper dollars. But it was from defensive to defensive, right? I can't imagine someone that's been sitting in gold and silver selling, taking profit on gold and silver, and then going long high PE ratio equity, right? It's like, that doesn't make a whole lot of sense, right? Now, someone could do that, and someone may do that, but why? Right? Why would you be defensive to like the highest risk you could possibly be? I don't know. I don't understand that one. So I don't think the money would move into the equities markets like that. So I don't really know, to be honest, but I'm asking myself probably all the right questions that I don't have all the right answers to. So at least that's a start. So, but now like I said, I've been selling some gold and silver on the way up because it's made me quite a bit of money, and then I've taken that and I've gone into defensive equity, basically long market call selling. So capped upside, but still gaining. And so if the markets do well, I'll do well. I just won't maybe do as good as the market, but I'll still be making out. And if the market goes sideways, I'll beat the market. And if the market goes down, I'll beat the market too. So that's how I'm positioned. So anyways, and if gold and silver keep going up, then I'll do even better. So I don't know, right? That's kind of how I've moved some money around as of recently on some of the bigger portfolio stuff, and well, hopefully it works. Oh, actually, another thing I was thinking about is, I've been thinking more about the baby boomer movement. I already know I'm a little late to the trade, but there might be a little more left in the narrative. And so, I don't know, we'll see. Got to think of the next one. But pretty much as the baby boomers get older, right, all their money's going to be moving. Well, there's pretty much two things that are going to happen. They're going to need more health care, anything related to healthcare. I mean, there's a couple things like ranch style homes. Pretty much they've bought them all up. Those are harder to find, more in demand. So healthcare is going to be a little bit more in demand. Even like senior care living centers will be in demand. So maybe the next like 10, 20 year play is going to be, I think, to get kind of the exiting of the baby boomer population will be healthcare, maybe some assisted living type things, and then obviously ranch style homes, but that's kind of already happened, if you will, and maybe will continue to happen. So they were kind of on the ending run of that narrative and that play. And then obviously what's going to come with that too is going to be the passing off of wealth to their children. So that's going to require estate planning, which is going to be in finance. So then there might be a reason to, be involved in the bank narrative later on as more of this kind of transferring of wealth happens, because the fees and stuff that'll be paid is all going to be through brokerage and investing companies. So got to do a little more research on that, but that might be another play in maybe the next 10 or so years. A couple narrative plays around the baby boomer group. So those are some things I'm thinking about as the future progresses. Anyways, S&P 500 going up. Figured it probably would, so we're just going to keep going with the bounce for now. Arguably looking for the market to maybe go up as high as 690.58. So like I said, if it just keeps going, it sounds kind of dumb, I guess, because if it just keeps going up, then obviously anything that you say above the current price would just end up happening anyways. But that's the funny thing about the market. Anyways, we'll just basically continue looking for the markets to go up. And if at any point by the time or when the market opens, we start to see selling pressure in the market, we can change bias in the short term. And then we'll just look for the targets on the downside, right? So again, that's another thing, right? When the market opens, we'll look at all the market internals, and if the market is running strong, then the market will just continue going up. And if it's not, then it's not, and that's fine, right? So that's the nice thing, is that when the market opens, we can kind of finally start looking at some of those market breadth indicators, if you want to give it more of a probably correct wording. They're both correct. But once the market opens, we'll see how the market internals are doing. If they're doing weak at the open, then the market is going to pull back and it will pause, and it may go down to 688.54. If the market opens up and everything is screaming bullish, then the market's just going to go up, and we'll look for it to probably run up to about 690.58. So one of the two price points that's pretty much going to happen is going to be either here, or it's going to be a pullback to there. That's kind of the first two things we're looking at. The overall trend is currently bearish / neutral, right? If you're just thinking about the environment as a whole, we're in a neutral to bearish environment, and we're currently bouncing, right? So that being said, the greater trend is still neutral to down, but we're currently short term up, right? So does the short term up continue? We'll see. If not, we then roll down to targets, etc. Cheers. Fine. 9:21 in the morning. We're doing just dandy. How's our friend Bitcoin doing? It's just pretty much, it doesn't even matter. Again, we already know it's going to be going down lower, right? And we've been saying that for pretty much a long time. It doesn't even matter. Whatever the internet's saying, whatever someone somewhere saying, I don't know, it doesn't matter. We're going down, folks. We're going down. And when it's time for the market to bottom, I'll let you know. There's one thing I can tell you, though. I can tell you the price target right now to the upside. Let's see. Yeah, so right now our long target destination is about 100,000. Yeah. So, when the market's ready to bottom and finally puts in a bottom, we'll be, no matter wherever that may be, whether it be 50,000, 30,000, 40,000. I'm just saying random prices right now. I have an exact price in mind, but sometimes exacts aren't always perfect. So, but either way, when the market bottoms, our target's going to be 100 grand. So whether it sells off to 65, 60, 50, 51 and a half, $52,393, $45,000, the target's still going to be 100 grand. Now, 5 weeks from now, that 100 grand target's probably going to be like 95 grand, etc. But it doesn't really matter. Wherever it goes to the downside, we already have the long target back up. At least I do, or think I do. So yeah, now you guys that watch the stream do. So right now, like I said, we'll be targeting for the time being. It's 100 grand. It's going to be lower. I already know it's going to be lower than that when the time comes. But for now, the price point would be 100 grand. $9.20 tree. Market isn't open yet, but we're close. We're getting close. I know it's coming. Super duper duper. Oh, what a beautiful day it is. Alright, I'm gonna just kind of re-go through some different random stocks and just basically cross my fingers, hope and pray there's actually something halfway decent, but there probably won't be because there usually isn't when you become extremely picky, but that's how you pretty much avoid buying pieces of shit and only involve yourselves on halfway decent things. It's kind of possible, but probably not. Let's break down. But yeah, I'll take you for the ride here on this. I mean, you'll see. I mean, I'll just run through stuff real fast. I mean, this is pretty much the perfect a behind the scenes look at everything I literally do on a day to day, and it doesn't take long. I mean, once you kind of have everything set up the way you want it, it takes 2 seconds. All right, so I've already done that one. That one's nah. This one maybe. See, like this is I'm looking at, right? So when I look at this, it looks like absolutely nothing right now. Like this looks like terrible, right? Pre-market nothing, but I'm like, meh. Doesn't mean it won't be something good. So you can see where the pre-market tops at. It's right at the 50 SMA here, and there's that guy, right? So in my mind, I say to myself, the only way this turns out to be good is if it breaks back over and then it goes above, right? So if the market kind of moves up and through, then maybe you get a breakout. So this hasn't broken out yet. It may not break out. It might break out, but the key thing is nothing's happened yet. So it's not extended, hasn't broken out. It's still a maybe, all right? So we're not chasing anything. We have something we can sit, watch, and if the market wants to manipulate and make this a good player for the day, that's something we don't control. It's something the market just gives when it wants, right? So if that ends up happening, great. If not, figures, because that's how it usually goes. But that could be something. This one just, nah, maybe, I don't know. OPRA, we already covered that one. LXEH, this one's, there was a ton of volume on it the other day. See, like this one, obviously we're late to, but I don't know. Maybe it has a continuation thing. Could be a potential continuation thing. Anyways, HAIN, we covered that one. We're far away from that. And what about this guy? So this is just, again, low volume, meh, gross. There's the back test there, and then down to there. So you can see it too. Like if you look at there, where's your 50 SMA there? Where's your 30-minute there? So what's the market do? Market breaks out, and there's your back test, and then there's your bounce, and there's your lower high, right? But that one's pretty much a no. We already covered this one. Like we said, this one broke out really early in the morning, but like we said, there is your breakout, there's your back test, and then there's your run. So this one, it's too extended. We're just no. This one is back testing, right? So I don't know when this started moving, but like this one, ready? So you see where the break's at here and here. Excuse me, here and here. And so what happened this morning? Right in the morning, broken out, algorithms pick it up, squeeze it up real quick, 2-3 candles, then probably retail chases it up, and then they dump it back down to where? The 4 hour. There's your bounce. And now at the 4 hour. So as soon as this breaks down, right, the 4 hour breaks down, the algorithms will read that, and then it will snap this right down to $1.90. So basically the risk with FATN this morning, if you were to get long, just in general, right, is that if it doesn't work, you're right on the over-under, right? So what I mean about, not the risk of getting long, let me rephrase that. It would be, it's this, right? So when it broke out and then it came down to here and back tested, anyone buying that long, right, at that low, right? See how it's, actually you can just see how it just held there and kind of popped up. That's it. Right now you're on the 4 hour support. So either the market has to hold or it just breaks down and goes to $1.90. So FATN's kind of like, you know. Anyways, I'm going to move this screen up. We're going to go back to the SPY. So anyways, you can see the market has shot up directly to where we were pointing to. You see how we have the 2 arrows. Either it's, your kind of 2 options, which is we're in a bounce, going to go up 2 right there. So long trade up 2, target 1 upside. That's complete. That would be done. And then let's see. Yeah, that would be a little bit of a challenge to do that one. I was going to see if we could go up to our next 50 SMA in the market, but that might be too much of a challenge. Again, not currently swing long the market, was just emphasizing the long target destination on the way up there. All right, so again, that long target destination is complete. The market is still in a neutral to bearish state for the time being. All right. Yeah. So, sometimes these live streams work better when you guys ask some questions, but I can't make you ask anything. I'm just kidding. Uh, yeah. I mean, I guess we've covered really everything. I always want to. How much more is there really to say? Right? We've covered the S&P 500, Bitcoin, gold, silver, price targets. Those have come true. But let's see. What are the market internals saying? Not really bearish, not really bullish open. Right now, the market's actually maybe leaned a little more bearish than bullish just because of the way the Magnificent Seven are trading. Currently, they have a negative MACD. They're red. They're pointed down right now. They're not actually going up. That could change, but for the moment, they're not. So pretty much, that's that. Right now, I would call it more of a mixed open than it is everything leaned long or everything leaned short. So it's, I would say, very dependent on what happens here, right? If this ends up turning into a big red candle down, then you're going to see the market top here. If this ends up holding this bottom and going green, then obviously the market's going to go up, which I guess it sounds kind of silly when you say it like that, but yeah, let's bring up the NASDAQ, right? Just so you guys can see it, right? So we'll enlarge this a little bit. So we got the NASDAQ up here on the right chart on a 1 minute, right? And then we'll enlarge this guy and we'll make it like this. All right, and on the left here, you can see we have, right, on the left you can see we have the Magnificent Seven ticker. So generally speaking, if the candles are red here, then a lot of times they'll be red here. It's not always a guarantee, but for the most part, usually yes. So what we're going to be looking for just in general here is the direction of the Magnificent Seven. Now, if we look on the very top here, you can see the S&P issues are moving good, right? So S&P issues are moving up, right? And you have the New York Stock Exchange issues. Those are going up. So everything's moving up for the moment except the Magnificent Seven. So as soon as they go green, we should see the SPY break up more and the NASDAQ start to go more. Right? So right now, like we said, you have S&P issues working up. You have the New York Stock Exchange issues working up. Something that's lagging or that's moving slow is the Magnificent Seven. Now, if those start to wake up and move more positive, then the markets are just going to go, right? Even right now, the NASDAQ's putting in a green candle, but we don't yet have really green on the Magnificent Seven ticker. That's pretty unusual, but that tells me this thing might actually squeeze harder. Because if it's already squeezing, but it doesn't have any green, and then it gets green, right? It's kind of one of those things. So let's go look at SPX. All right, 30-minute. All right, so this we'll just say it now. We might even see the S&P issue now up to or S&P up to its regular trading hours, 30-minute 50 SMA. That would be like best case scenario for the long right now, which would put the market back at 6,950. And if we go to the SPY and we look at the SPY here, regular trading hours, that would be there. That would put the S&P back to, SPY back to about 693 or so. Not too shabby. Yeah, I'd say the current long target destination for Bitcoin is right now is about 81,000 to 83,000, right in that area. So if we end up counterbouncing Bitcoin all the way back to, again, those prices, it would be pretty normal. All right, let's bring up the NASDAQ here. Go to 1 minute. All right, so if you look at, again, look at the Magnificent Seven. All right, wait. Yeah, it's correct. Oh, I see. Yeah, anyways, if you look at the Magnificent Seven here, they're still red, right? Kind of moving red. So there's a little red candle there, nothing too crazy. But like I said, you really need this to perform good many times for the market to continue long. So let's just bring this into a full screen. All right. So we know a lot of, I would say, so far today's market movement would be built off the New York Stock Exchange, built off some of the S&P 500 issues, not so much what's going on in the Magnificent Seven, but mainly what's going on in the S&P 500 issues, New York Stock Exchange issues, etc. And then obviously the Magnificent Seven is struggling there. If the long is going to persist, then generally speaking, we need the participation from the Magnificent Seven. That's usually the case. But anyways. So we don't have everything all working in the perfect direction for the markets to continue going long, right? We need the Magnificent Seven to kind of bottom and start picking up, or else we run the risk of kind of having the market top out and then going into a pullback. So what we want to see happen for the market to continue going higher is, again, the Magnificent Seven stocks slowing down some of the selling, bottoming, going up. Otherwise, like we said, we run the risk of kind of a top and a pullback of the move. Let's go see how gold and silver are performing on the day. Silver pretty much not doing anything too crazy. Okay. Gold kind of going up. Bitcoin kind of going up. Probably going to go up to where we said it would probably go up to. That wouldn't be bad. Yeah, I'm just going to kind of pop through some of these. Oh, nice. Yeah, I'm going to pop through some of these penny stocks real quick. Once again, if you will. How did I not see that piece of crap? All right, looks like markets are moving up. That's cool. That's good. So far the long is persisting. And again, we have, like I said, you have the markets moving higher. Magnificent Seven still just pretty much remaining flat right now. It's not the most ideal scenario for the markets going up. We'd like to see more movement up from the Magnificent Seven there. Alrighty, market moving up beautifully, nice. All right, looks like we've pretty much gone up to almost a 693 target, as we mentioned. Best case scenario long, right back up towards 50 SMA. You can see it right there. See how market is coming up towards 50 SMA, yada, yada, yada. Which then basically means we're coming into the resistance over under. So, yeah, as the market kind of creeps up into this 693 area, we might start to see some resistance or an attempt at resistance. Again, it's kind of, you guys know, it's the bullish over under point, right? So the market had broken down a couple days back, down, went up, back tested, down, now coming back to it again. Probably not as strong a resistance as it was here, probably a little weaker, but until the market actually gets above and starts to sustain above or what have you, you have to view that as a potential resistance area / temporary short-term, top area, if you will. If we start to get above that and holding above that, that's where we'll look to maybe be more optimistic on the market transitioning to a positive market. But as it would sit right now, the counter trend long trade for the day is now complete. Because, why? If you look at the 30-minute chart, and let's clean it all up, we've done what? We've gone back to the 50 SMA, right? So the market does what? The market goes through uptrends, and then it goes through downtrends. And for it to go back to an uptrend, it first has to do what? Has to go to the 50 SMA, and then go above. So the other day, we went into a downtrend, went back to the 50 SMA, stayed in a downtrend, put in a higher low. Now we're back at the 50 SMA. So the counter trend long is complete in the sense that markets go from downtrends to uptrends. So we were in a downtrend, and now we've taken the downtrend back to the level that dictates whether we stay in a downtrend or an uptrend, right? So when you follow this system, you'll realize there's basically a few trades, right? It's the swing long away from the 50 SMA. There's the back test trade to the 50 SMA. There's the breakdown swing short away from the 50 SMA. There's the counter trend long trade back to the 50 SMA. Then there's the swing long away from the 50 SMA. There's the short back to the 50 SMA. There's the sell away from the 50 SMA, the counter long back to the 50 SMA. And that cycle will repeat ongoing until pretty much everyone on planet Earth dies. So, when I say the counter long trade back to the 50 SMA is complete, it's complete. Now, it's whether or not the market wants to enter an uptrend or stay into a downtrend from this point, give or take, right? So markets go into downtrends, then they eventually go or try to go back to an uptrend, at which point they have to go through a counter long trade back to the simple moving average. That trade's complete. Now we're on the dictating whether or not we want to do a short-term temporary top here or break the market out over the 50 SMA. I personally would love to see the market break out over the 50 SMA and then go long into the remainder of the week. Why? Because then 401ks and everyone makes money. That's ideal, right? I would rather the market not go down. But currently the market is on the neutral to bearish side because it has not yet cleared above the 50 SMA. So right now, this right here is the 50 SMA. And this is the price point at which the market, 50 SMA market decides new uptrend here. All right. Now also, think about, just because there's a line on the chart doesn't mean it's like, oh, we're at there, we're getting long because uptrend. No, like think about the move in general, right? where, like, we know that an uptrend on the market can start over that price point, but look at where the market started from to get there. It started all the way down here, right? So the market was down, reversal long bounce trade all the way back to the uptrend level. So in terms of price action, right, sometimes you have these big long bounce moves all the way back up and just be, so it means a lot of times they'll hesitate, they might pull back some, and then they'll go later, right? So it's almost like they need a breather. So sometimes you have to pay attention to the price action that's formed coming into said levels, and it's not always just about, oh, there's a level here and the price goes over, so long, right? But you get the point. So now we are no longer in a neutral to bearish state as it relates to the last 1 minute trade, because obviously you can see, look at how explosive that candle is, right? Like, is that random? Like, no, right? See how explosive that 1 minute candle is getting right there? Not that that's going to dictate that the remainder of the day is extremely bullish or what have you, but that's because algorithmically we just took out the 50 SMA level. So there was some short covering there and people may be getting long and, just activity around that algorithmically programmed price point of the chart, right? So, anyways, we are no longer on the neutral to bearish side of the market as it relates to SMA trend, but we will need to see the market essentially hold above to say that the market's in a new swing long, right? So if we go look at SPX, let's look at the 30 minute. All right, now that we're getting over the SMA, we would basically say to ourselves, well, as long as the market maintains over 6,951, the market has entered a swing long state. So yeah, we're not going to be bearish the market for the moment. We're really, we're just not. So yeah, anyways, as I had mentioned this morning, I had bought the dip today on the S&P 500, and I think a couple days ago on the dip. But basically, I had bought some long on the markets throughout basically this dip because the market is below the SMA. So in theory, in short-term trend trading and over long-term investing, right, the market this week went on sale. So I bought the dip. And over the long term, I would effectively be only adding to the long-term portfolio when markets are on discount and on sale. So that's what I did today. I bought some of the S&P 500, some of the smart money portfolio, whatever, past couple days in this dip because markets are on sale. So yeah, and that's for the YouTube M1 portfolios that we kind of cover here and there. Yeah, so what now? We'll just keep hanging out, discussing markets and plays and all that good jam. Now remember, the market right now is going to pull back directly to the 50 SMA. That's normally what happens. Well, two things actually happen. So now that we've broken out and over, we actually anchor a 1 minute volume weighted average price to the low of this candle, because once we do, well, just in general, right? So the market broke out the 50 SMA here. So if the breakout is going to work and just go, it generally means it's going to hold above the 1 minute volume weighted average price of the candle that breaks the 50 SMA. All right. So you can see price action has broken over 50 SMA. This is the pullback to the VWAP. If we don't sustain, market instantly goes back to the 50 SMA. All right. But yeah, so you get the point. Anyway, so if I zoom in real quick, you can see, markets are so far computerized holding that VWAP right there. And ultimately, if that doesn't end up holding, then you'll see the market just go straight to that right there. Okay. So what you're seeing right now is strategy that is used on a 1 minute time frame when the S&P 500 transitions through simple moving average calculations. So if we look at the market internal, so if you look at, we're seeing sort of a trade of hands, right? So you see how earlier this morning it was all S&P issues running, NYSE running, and now the Magnificent Seven are bouncing, which it's not, it's kind of a good thing, right? That's what you would want to see to have the markets kind of continue. Personally, I think we're just going to fall over right here. The markets are going to come down into that 6951 area or whatever. So there's that. But all right, so again, there's the market pulling back pretty much as we expected it probably would, right to said levels. All right, so now, well, it's really the same it's always been. It's about the market. Again, the market's trying to decide, if this is just, when I say decide, it's really just it, right? So if you look at the 30-minute and you go back to the 30-minute chart on the S&P 500, what do we know? That the market has completed its counter trend long trade back to the SMA. Now it's about whether or not the market wants above or below. And so what you're seeing in the real time so far is the market basically just do a counter long trade back to the 50 SMA, break out for 1 minute and not sustain the breakout, and now it's just rejecting. So it's ultimately turning into a 50 SMA back test and resistance. Ultimately just saying the market is still in a neutral to potentially bearish state, because why? It's not in an uptrend, right? It's down and still under. Okay? So until we get above, until we establish trend above, it's still a neutral to bearish state. So now what we're going to do, so now we're going to anchor a 1 minute volume weighted average price to where the market is now breaking back down, the 50 SMA. All right, here, and like that. And now essentially that would be our counter trend target, like that, and potential resistance down. So like if we wanted to, so if the market's going to see like a 50 SMA top and roll over, then it would basically stay here and then go down like that. Vice versa, back above, long. So that's how you'd read that market now. does not make sense. So confused. Oh, what a beautiful day it has been here, ladies and gentlemen. I mean, seriously, just another beautiful day in the market. You just can't even complain. Shabby. Now, it would be nice if the market was going into a new uptrend here. Let's just double check some other stuff. We're now above, so that'll be style upper band. You can do that. That's good. I mean, I'd say the SPY and the SPX does arguably have a squeeze target up to 6,968 as well. So, I mean, if we do see maybe even today SPX at 6,96831, that would be somewhat okay / normal. Double check this guy. Yeah, or the SPY arguably towards 69452. So, like we said, we're kind of getting over that 50 SMA, so uptrend could, maybe is starting here. However you want to read it. Again, I don't control the market. Sometimes they work, sometimes they don't, but just in general, market is transitioning above that 50 SMA. So arguably the uptrend is, can, maybe is, should, would, there, then, what if, maybe this, that, the other is starting now here. We'll see. So I got a little bit long the market as we're kind of breaking through that. For the swing long, we'll see how well it does. Some do good, some maybe not so good. I don't control that. But currently on the day, I would say our maximum long target we're kind of looking for is, well, I don't want to say maximum, but just in general, 6,96857 now, SPY, so taking the market up to there. This one, what do we say it was? 69450 SPY, Magooster, McGee. And now that we've actually broken over the SPY 50 SMA with some decent authority, we really should, what do we say, 69450. So we're looking for the SPY to go up to basically right there in the moment. And then once the market starts to pull back, we're going to look for the market to pull back to the 1 minute volume weighted average price that I'm putting on the screen there. All right, so there's that. So then that becomes our 1 minute volume weighted average price pullback target. Cool. Oh man. Ugh. So as we mentioned before, if the breakout over the 50 SMA, which if you guys forgot, the 50 SMA right here. That's 50 SMA. Whoa. Break up. So pretty much, yeah, that's the breakout over the 50 SMA. Now, as long as the market maintains over the 1 minute 50 SMA, or sorry, 1 minute VWAP here, sort of the immediate breakout in momentum is still a little bit more favorable on the upside. It's really just a trailing support level for the breakout, right? So it's like, again, if we just broke out over the 50, if it's going to break out, pull back, and keep going up relatively easy, then it's going to hold above that 1 minute VWAP. That's pretty much it. If it was a breakout that sucks and isn't meant to do good, then it would break out like you just saw. It would then pull back to the box, the 1 minute VWAP, as we have on the screen, and then it does not hold the 1 minute VWAP, and then it falls all the way back to the 50 SMA, right? That would be a shitty breakout. So we're hoping, thumbs up, that this is a good one, and what we're going to see is something like this. Arguably pull back down into, and then continuation up. If we don't get the continuation up, the more likely event is you then break down, go back to 50 SMA. And the reason I know that is because this repeats pretty much all the time. So it's only so many things that can actually happen, right? So anyways, we're looking long up and over the 1 minute VWAP, and hopefully that continues to work and the market continues to go up. And yeah, because that would be great for the entire world and you guys and me and our long-term investment accounts and the YouTube investment M1 portfolio accounts and the swing trade that we just put on. And because I guess that's it. You need to pump it, market. Market, you need to pump it. You need to pump it up. Alrighty, it's about to happen. It's happening. Are you guys ready? Are you ready? Nah, I was just saying that, making sure you guys are paying attention. Nothing's happening. It's the same old, same old. Red, green candles go up if they go down. Nothing has changed. Nothing getting crazy, 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 crazy. Correct. Yeah, just had to make sure you guys are paying attention. Silver, $71. Figures. Yeah, good old stuff. All right, guys. Yeah. So just be prepared at all times because you could get hit with the 50 SMA break on a Monday around the time of, I don't know, 10 o'clock in the morning, and the market turns into a swing long. And then you look back 3 weeks and go, when were we supposed to get long the market? I don't know. Maybe at 10 o'clock last Monday. That might have been it. Hell, it might not be it. Hell, it may never get long. I don't even know. Maybe we're all just going to be poor. We're all going to go broke. Don't know. Oh my gosh, dude, why is the market going up, guys? Can anybody help me understand that? I don't get it. I'm sitting here every day of my life, and I just don't understand. Why is it that there's just some kids on YouTube that could just wear sweatpants, wake up in the morning, tell me the market's going to go up, and then tell me where it's going to go to, and then just make sure I stay on the long side pretty much all day. I mean, I don't understand how they do it sometimes. Well, one thing's for certain. Buying the dip worked. See, that's the thing, is buying the dip will always work until it doesn't. And then you get caught into a bear market. And then it's like, well, I guess we'll just keep buying the dip. So, yeah, I would say everything today is going as planned. The market was in a sell move and clearly was oversold enough that we were able to then take it back long. And so far, we're able to transition the market back to positive territory. Now we're just hoping that the computers and algorithms and banks and the really big players of the market that actually control the system want it to be a long, because then if so, we've gotten long at a great spot. We're not late. We didn't miss anything. And we could be pretty much at the start of a swing long that maybe could last a week, 2 weeks, could be 3 days, could be 7 hours. Who knows? But one thing's for certain, we're in, arguably at the start, and let's just hope that it is the start. That's all you can do. All you can do is fingers crossed, hope that someone manipulates the market in the upwards direction for you. SPX 6950 ran from 3s to 20s. Nice. That is good. Oh, the market is just straight pumping, but will it last? Will it last? No one knows. No one knows how long the pump. Nobody knows how long the pump will last, but we hope it's going to pump forever. Also, do remember the 1 minute volume weighted average price of the 50 SMA breakout has not been tested, which pretty much just means at some point it's going to be tested. So as long as it's untested, the market will trade back to it at some point. Oh boy. Whew. Well, that being said, I think I'm going to go warm up another coffee, and I will be right back. So for the beautiful 5 souls, don't go anywhere. You don't want to miss what's coming next. Another green candle. Oh, we are back on, ladies and gentlemen. Oh my goodness, look at the market is going to pump so hard. Excuse me. All right. We are swing long, ladies and gentlemen. We are swing long. What does that mean? That means the swing that I hung up in the backyard to the tree has a long rope on it. Meaning you can swing for a long time. Oh, you guys thought we were talking about stonks. What is that? No one even knows what that is. Never heard of that in my life. What's a UPRO? Is that someone spelling pro backwards? I don't understand. Oh my goodness, the market's going up. That's crazy. So, what you guys should do is you should go look at the news on Google. There's a good chance that the narratives are kind of starting to change positive. Again, I haven't really been doing anything for the past couple weeks, it seems like, as far as the markets are concerned. I've just been doing a little bit here and there just because our house has been torn up and there's floors going in and carpet here and painting here. It's just a lot of construction in the house, so I haven't been streaming and on the computer as much. So again, I'm not really up to speed on news or current narratives. So I don't know what people have been saying, what the markets are saying, but either way, now that the market has broken up and over the 50 SMA today, there's especially if it sustains, then that means bullish movement happens in the market, obviously. And then as a result, you're going to see all the news and the narratives kind of maybe start to trickle in positive. So, as it relates right now, there's a good chance that the narratives in the market or the news that you're seeing is probably going to be talking about the gains that the market has put on today. The market's up. And then from there, the market will most likely use whatever kind of narrative that it can that's kind of relevant over the past couple days or weeks. So if that has to do with Trump and Greenland or the new Fed president, I know that those are a couple things that have been going on. It could be something like that. Really whatever these people at these news organizations decide is relevant that they should write about, they will. And then they're just going to attach that like a sticky note to the performance of the stock market. All right. So that's really all that happens, right? Is the market's just going to go up and down. And then each one of these narratives or articles that are kind of hot in the moment, they're used as like a sticky note. And then they're just put on top of the price action of the market. And they go, here's why. It's like, no, actually, that's completely wrong. But looks right. So not sure what those are, what they're going to be. But, That's good, Crypto P. That's good. That's really why you're here. You're not here because I know anything about the stock market. I know very little. The whole reason you guys are here is because it's actually a cooking show. We do cooking classes here. But yeah, the good news is that the market is up. That's good. We know that. Okay, all jokes aside, yeah, but no, seriously. I did buy some VXUS today. I got long some healthcare today. What else? The S&P 500 today. Medical devices. Is that it? That's it. Real quick, we'll look at VXUS. So, like I said, I got some money that I've moved more international over the past, definitely the past year, but more so, over the past year. But, so if you look at VXUS, so again, international Vanguard ETF, low cost bullshit, you get the point. Again, this one's on sale, so, while everyone's panicking over the past day and a half as this maybe goes down, I'm coming in buying some of that up because if it goes back into an uptrend, then I just bought it on the dip. So pretty straightforward long-term investing stuff there. Dollar cost averaging, making sure you're deploying your capital during moments of market sells or pressure, which is where that would be at. So that's part of that. Same thing, IHI, except this one's kind of been in a little bit of a downtrend over the past couple of weeks. Hasn't really gotten out. Those are the medical devices. What else? Some BSX. I'm not really sure if my healthcare play is going to work out too great, but we'll see. It is what it is. I'm hoping I'm right, but I feel like I wonder if I'm just too late to that narrative in that play. I might be, but guess time will tell. Time will always tell. So market's doing just fine. Market's doing good. Am I missing anything? Am I thinking anything? Am I missing something? Oh, I am missing something. All right, so the NASDAQ, the QQQ, just got up to its 50 SMA. So this becomes another algorithmic point. So now we should probably put our attention onto the QQQ because, you see how the SPY started I'm going to move this red line. So this red line goes to where the uptrend started, which was right there. Right? So the SPY is in an uptrend. All right? But the NASDAQ or the QQQ is not. So if you look at the 30-minute chart and you see the SPY, or the NASDAQ, sorry, you'll see what? It's not in an uptrend, right? It's just below that 50 SMA. So we have done what? So again, we'll go through, there's 3 or 4 stages of the market. The way I read the market as it relates to the system for the most part is there's 4 stages of the market, or really there's just 2, but they repeat both on the bull side and the bear side. So there really is 2, but 2 different directions, making 4, which would again be basically the swing long or the run, right? And then you have your correction back to the 50 SMA. Then you have your sell move away from the 50 SMA. And then you have your correction back to the 50 SMA. So it's the same trade repeated on both sides of the playing field, whether long or whether bearish, right? So there's 4, right? 4 scenarios. Long move, pullback 2, mean, or pullback 2, SMA, then you have the short away, and then the move back 2, etc. And it just repeats over and over and over. Right? So essentially, we have the NASDAQ going to a bearish neutral environment, counter trend back to SMA, move away, counter trend back to SMA. But not above and not established above, so not currently in a swing long market. So that tells us that the NASDAQ is currently running into resistance, right? So until the NASDAQ gets above that price point, that red line, then this is still a 50 SMA back test on the bearish side, which could cause a temporary pullback. And then obviously, right, if the NASDAQ is running into resistance right now, as you can see, it's wicking because it's just how it goes, right? So, right, resistance, NASDAQ, 30-minute trend resistance, causing a pullback. Now you can see why is the SPY pulling back. And now do you see how we've pulled the SPY back to? Remember we said the 1 minute volume weighted average price, we will pull the market back to that price at some point. It's going to happen. It's not going to happen. So there it's happened. And we just used the NASDAQ 30-minute resistance over under as a means to top the market. So it's this 30-minute trend that the NASDAQ is running into, which is trend resistance, creating a temporary top on the market, allowing us to decrease the price on the market, so much so that we've now back tested the 1 minute volume weighted average price of the breakout on the S&P 500, which puts the market back at 1 minute trend support, VWAP over under. So this is ideally where we'd like to see a 1 minute bottom on the market, hopefully get bought up. If it doesn't, that's fine, just is what it is. Thanks, Crypto. Appreciate that, Holmes. Yeah. I just have a very analytical brain, at the end of the day. I'm not the greatest trader in the world, but just in general, I'd say overall, as far as investing and trading and research, I do a pretty good job overall, but I wish I reached the heights of trading like my friend Brandon, and some others, but just never happened for me over all the years. I've had my moments and what have you, but amongst all of that, I've pretty much learned too many different strategies that do in fact work. But like I said, and like some of the books say, sometimes better teacher than doer. But part of it is just, I think it's more the psychological, emotional side of the investing. Over the years, as I gotten older, I don't do as good at having lots of risk on with stuff for the short term, if you will. Like gold and silver and Bitcoin and all that stuff. I mean, hell, I made like 150 G's over the past year and a half, 2 years on a lot of that stuff. But that was more of like longer term plays, right? So, I was really happy about that stuff. But yeah, anyways, so there's that with whatever I just said. What was I just saying? The SPY pulling back to that price. So that's happened, right? And like I said, that's the 1 minute 50 SMA, and it's the key volume trend. So we watch that, and we watch what? The 5 minute. So let's just make sure we have the 5 minute. So if you look at, where's the 5 minute? So there's the 5 minute. So yeah, there's a 5 minute. So basically, in this current scenario for the three of you guys, whoa, we're changing lives. We're changing 3 lives. No, I'm just kidding. But, for this current scenario, we would normally say, hey guys, like we said, the market will pull back to that 1 minute VWAP at some point, right? Same goes for the 5 minute, generally speaking. So now you can just kind of see how we've created this little box and made it a zone. So we look at the 1 minute and the 5 minute, and we really just make that a zone and pretty much say to ourselves that this is that pullback of the SMA breakout, and this is where it has to sustain to kind of keep that immediate momentum of the breakout going, right? So this is kind of where we hope that like a dip holds and gets supported, all right? So yeah. Huh. What is going on in the world? Silver down to 70. Yikes. Yikesers, magooster, McGee's. Anyways, hope you guys pretty much did as we said. Watch it into the 108, sell calls up there, do all that jam. Hopefully made someone some money on pretty much the world's most perfect call. I mean, you know what's funny is like all CNBC had to do was just put us on for like a week. It's going up to here, and then when it get there, it's going to top. All right, you could have alleviated all the random, but the squeeze and the government, and it's just no, it's going here and then it's topping. Could just solve everyone's mystery for them. All right, has anything happened in the... Oh, actually, let me think. Oh, look at that. I mean, look at that perfect bounce right where we said it was going to pull back and then arguably bounce at. I mean, that's good stuff. I mean, that's the type of... It's just great luck. Just really gotta love the luck. Sometimes you just gotta get lucky, that's all. And make you look good. That's it. I mean, look at that. Your breakout is here. Market will pull back to the VWAP, and then you look for a bounce. There you go. If only someone could tell me how the stock market would trade before it happens. And still, you know. What about MSTR? Let's see, what's this guy doing? We definitely have a play coming on MSTR, but I think it's still too soon. We definitely got a play coming on this guy, but again, like I said, it's just too soon for the moment. We need to let that bleed a little more. I think everyone in the crypto world needs to get their nuts kicked in just a little more, and then we'll be ready to pounce. And when that time comes, you will know about it. Because I will post one YouTube short, just like we did about the Bitcoin top. We just posted one short. It's going to top October 2025. And we'll do the same for the old shitcoin. Nah, I'm just kidding. It's actually mapped off right there. For the four people that want to know, that's literally it right there. I think. Hold on. I actually think I have that wrong. Something's not right. Yeah, no, that's off. Right there. No, that's wrong. Hold on. That's how long I expect Bitcoin to be down for. Yeah. So this is, I mean, like that's my timeline for Bitcoin, right? So I expect us to be down all throughout 2026. So, for me, it's like when I see some article on the internet about like, oh, Bitcoin something, like, here comes the rally. It's like, yeah, okay. Sure, bud. Sure. So like, I don't know. Maybe I'll be right. Maybe I'll be wrong. But I just can't. Sorry, I just can't see it any other way. Until I'm proven wrong, I guess. I mean, you know what? Like it's not gonna be perfect. It's not gonna be perfect. Obviously, it's definitely gonna be wrong to a degree. But yeah, I just don't really see Bitcoin having much of a rally throughout 2026. Maybe towards the end of 2026. Maybe in the beginning of 2027, then we'll see Bitcoin pick back up again. But until then, I really just expect it's just going to be lower low, lower high bounce, back to sell, down to, some price point, and then everyone's going to be all pissed and mad, and well, they already are, but, yeah, so I guess we'll see. Bitcoin price $52, yeah. Or unless you're talking about the right number. Oh, my leg just fell asleep. Oh, that doesn't feel good. Oh, man. What a stretch. All right, let's go take a look at the news, shall we? Because let's just see yeah, I mean, we'll just see. I don't know. Again, like I said, I haven't really been up to speed on anything lately. So. All right, so whoa, what the hell is this? I don't like that. How did that just happen? Stop. No. What? No, thanks. That's stupid. Well, that's lame. News. Full coverage. So S&P 500 rises to start February as traders shake off silver and Bitcoin decline. Stock market today, NASDAQ, futures fall, gold, silver price in focus. The Wall Street Journal just needs to tune into our live stream and they'll have all they need to know about gold and silver. Stock market today, Dow and S&P 500, NASDAQ futures sink. Do they sink? Are they sinking? Are you sure they're not rallying? Yahoo Finance? Yeah, so it looks like they're just now coming around. Gold and silver rebound. Those are not rebounding. Those are going down, champ. Yeah, so it looks like maybe we got to get through the day first, and then once we do, and if the market holds, the narratives will start to kind of change a bit, and that could be a little bit more solidifying for the rally back up to hopefully all-time highs. Yeah. Yeah, we're somewhere in there. And I'm kind of wondering if the markets are going to kind of throw us for a little bit of a curveball. Maybe we go a little lower than that, maybe not. But just in general, I think, what was I going to say? I think in general, we are looking for, yeah, pretty much that. Yeah, we just said. Good morning to you, Bless 7707. What's up, brother? Good. Well, I guess it's maybe. Well, I guess it is the morning. Holy cow! I thought it wasn't the morning for a second. But yeah, good morning to you. Cheers. Let me know if you have any questions. Feel free. Bless up. Bless up. Okay, you know what time it is? You know what time it is. It is time to see if there is any decent penny stock moving, which I know that there probably isn't, but I will look anyways. Garbage. Had a move, but was not low risk. No. Eh. Meh. Oh, there's the 30-minute. Actually, could have taken that for a little trade, but that one's done for. So pretty much no, as expected. Bitcoin. I mean, not really doing much. Like I said, its target's already there. All the good jam. Let's take a look at the volatility index now. You saw that we tapped the daily 50 SMA and we skyrocketed today. I'm not sure. I'm assuming you're probably talking about the SPY. Let me hold on. Wait, where did my chart go? There it is. Yeah, I'm assuming you're talking about the SPY, but I guess I'm not entirely sure. That was during the pre-market. Yes. Okay. Yeah. Let me see. So basically what you just said to me is that during the pre-market session, we tapped the price of 683.75 and then went up, essentially. So let's just double check. We did not. Well, that's not entirely true because sometimes TradingView is a little goofy. So let me just double check before I say something silly. Let me go to the daily. And there he is. Wait, where'd you go? Bring that back up. Yeah, so on the daily, we did do it. Yeah, sorry. Yeah, say sometimes TradingView doesn't display data quite correct. So yeah, on the daily time frame, we did hit the daily 50 SMA and essentially go up, if you will. So, you know, the one thing to keep in mind is that pretty much when you use a 50 SMA, the rules are the same regardless of the time frame you're looking at. They're all the same. It's all the same rules. So that's kind of the nice thing that I've kind of come to like about just in general the 50. And it would be the same for any SMA, that is, right? So the rules are always the same. So, you know, essentially what you saw today was the market sold down to the daily 50 SMA, and the daily 50 SMA ultimately held support and turned into a long. So you could have decided to get long the market today down here for the purpose of a daily 50 SMA move, right? Which is the same reasons, you know, that you would get long the 30-minute for a back test. But yeah, so that's what I would say happened is you saw a daily 50 SMA move, bounce up, and then turn into more of a shorter term long play. But yeah, no, absolutely. You got a daily 50 SMA back test there, 100%. And what was I getting ready to look at before you mentioned that? That's right, the volatility index. And the reason I wanted to look at the volatility index is because it might be signaling to us something else. So if we go look at the volatility index, the volatility index is now below the 30-minute, but is it below the 1 hour? It's not below the 1 hour, so it's coming into potential 1 hour support trends. Got it. All right, and now the market, what about the 1 hour here on the marquee? Probably should be above, right? Yeah, okay. So basically, for the market to continue moving long in an easy manner, one of the things that we would like to see next is we would like to see the volatility index take down the 1 hour trend. See, what we have on the volatility index right now is it was in an uptrend, right? So market was uptrending, and then just now, today, it took out the 30-minute trend, right? But it's not below the 1 hour trend. So the 1 hour trend is down at like 1640. For the market to kind of continue trending and kind of going up easily, we would also like to see the 1 hour get broken down. Until that happens, you know, it hasn't happened, but just in general, right? So 1 hour trend's another important level we like to see break on the volatility index to kind of continue rallying markets many times. So that being said, that's kind of one of those next things to arguably see, which then also means that so like right now on the volatility index, really the one of the two, like the server volume is way too low, lower than usual. Oh, thanks for letting me know. Yeah, that's because I have it all the way, or wait, let me double check. I would say I have it. Is it better now? Let me know. And then if not, I can turn the gain up. It's because my mic's a little further away. What was I going to say? Yeah, so pretty much right now for the volatility index, you have pretty much two things that can happen, one of which is going to be a long back to here, or the market's then going to sell to this price right there. All right, so those are kind of the 2 price points that we'd really be thinking about for the volatility index right now. So, yeah, obviously if market moves down to lower target, it's fine, stays up, goes to the back test, spirals over, blah, 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 but yeah. So anyways, hopefully the volume's a little bit better now. You guys can let me know, and if it's not, I can always make it louder. Do you still check VVIX? Yeah, I look at VVIX. I just didn't look at it the second, but yeah, I mean, VVIX, same thing. Well, it's not necessarily the same thing, but it's pretty similar in the sense that, again, the VVIX was up. So people over the past week were hedging volatility. Sure enough, past couple days, we got that big drop in the market. Now the VVIX is below the 30-minute. So in theory, you would say that some of the hedging has been taken off. But like we said, we're not below the 1 hour. So it's a scenario where it's just in general, right? So we're below the 30, but not the 1 hour, right? So the 1 hour is still a support and whatever. And so just in general, we would like to see the volatility index and VVIX both below their 1 hour trend to give us more confidence that the long that we're seeing on the market is stronger, right? So it's just one of those things, right? Like everything is in relationship to the system, right? So if today the market broke over the 50 SMA, which it did, and we're like, oh, swing long, great, market go up, cool. Well, one of the things we would like to see happen is the volatility markets break down for the long to keep going. So it's not that, oh, the volatility market has to break down. It's not that, oh, the 1 hour trend, that's what you have to focus on. Oh, it's because 1670. No. We've seen that the S&P 500 has moved into what we determine as a potential swing long, positive market, bullish market. And if that's true, then one of the things we would like to see happen are the volatility markets react or perform accordingly. accordingly would be breaking down. Breaking down would be losing support. Losing support would be, in this case, going below the 30-minute and the 1 hour. And those just so happen to be priced wherever they're priced. So it's not the be-all, end-all. It's not, no, these are just the things that you need to keep progressing in a certain way for markets to continue to rally, right? It's not like our life depends on it. It's not like it's the best strategy in the world. It's not like the 1 hour 50 SMA is literally where eyes to be glued on the chart at all times. No, it's just in this current moment in time, that's something that would have to break down for the markets to easily go up. If they don't just break down, then you might have a market stall or stop going long until maybe, let's say, tomorrow. And then they break down the 1 hour. And then the market's like, cool, go higher, right? So just currently we've packed our family up in the car and we're on a road trip right now. And unfortunately, we're on the S&P 500 road. And right now we're at a intersection and there's a stop sign, and the stop sign could arguably be the VIX 1 hour. So we're just hoping that the VIX 1 hour doesn't cause too much hesitation for our road trip. We want to continue going to our destination, and that's the moon. That's to Lambos, Raris, and beautiful women. Only way to obtain that is with a lot of money, or a Greek goddess physique with the face of Ryan Gosling, which, let's be honest, I sure as shit do not have, and I'm pretty positive neither do you guys. So we're SOL is what I'm saying. Might as well just make a dating profile on Grindr while I'm at it. So, here we are, ladies and gentlemen. Just me, just you, in a bedroom, in a house, somewhere in Michigan. Fingers crossed. We have the best investing, the best trading strategy known to man. It's called the hope and pray strategy. It's not complex. Doesn't take very much to learn. It actually takes no skill to learn. All you have to do is just sit there, hope, and pray, actually. So, and it works well. It does. It does. No, nice. Bless up. What's the key to entries? I mean, sometimes I have good ones, sometimes mine are crappy-ish, and that's kind of, so, yeah, I mean, all I can say to you, brother, is if you follow the 30 minutes, there's entries for all sorts of stuff. You can play Fibonacci entries, but that's a different strategy, kind of. You could play off of SMAs, you could play off of patterns, but as it relates to the system that we're always kind of talking about here, all right, so if you wanted to get long the market because of it getting over the 50 SMA today, let's just do some hindsight, right? The yellow line being the 50 SMA, right? So what do we know about just entry, right? So obviously, if your goal is to be long bias over the 50 SMA, which is the yellow, then your entry would have been either on the break here, which arguably your trade went negative, or it would have been on the break here, right? It could have been on the break below if you thought it was going to recover, but the concept being is that we know the markets and algorithms like to try to transition markets positive and in a bullish trending manner over the 30 minute, right? So your objective is, if you want to be bullish over the 30 minute, you try to have your entry as close as you can to the 50 SMA, or when the market pulls back to the 50 SMA, right? Or as close as you can to the 50 SMA. And why? Because we know that the market goes bullish over the 50 SMA, but it also goes bearish below. So if your entry is as close as possible to the 50 SMA, then you kind of have the lowest risk, in the sense that you would stop out if it broke the 50 SMA, right? Because, and let me take this to TradingView, that would be easier. Yeah, so as far as entries go, like I always try to get in long as close as I can to the 50 SMA on the 30 minute, as it relates to being long bias when the markets transition through the 30 minute. Yeah, so, there's that, right? Yeah, so I'm just, yeah, I've gotten stopped out many times. Or here's another one, right? Let's say you missed getting long here, or you missed getting long here. Then the next trade I tend to look for would be a short-term trade off the 1 minute or 5 minute 50 SMA, right? So, right, if you don't catch the breakout, right? So where's the breakout? Well, it's right there, right? So this would be your breakout. All right, so if you didn't catch the breakout here, right, then is it best to chase the move up or wait for a pullback? Usually best to wait for a pullback. Me knowing the system as well as I do, I know that a common pullback will be to where? The 1 minute or the 5 minute 50 SMA VWAP. And I could take a trade there versus buying up into the highs and then getting pulled back on, right? So, yeah. So those are a couple ways that you can kind of get trades. So now the way I view this, right, is that all of this long pressure going up, everyone buying this move and this dip, they're now red. They're underwater. So this is where we kind of run the risk of maybe doing one of these. Now, I don't necessarily think that's not like a guaranteed thing by any means. I'm just saying that naturally, when you start to get below the 1 minute volume weighted average price from a breakout of a 50 SMA, you just know you're kind of stopping out some traders. And sometimes it leads to a cascade, not all the time. I don't want to confuse people too much with that one, but. So yeah, as far as entries go, what you just described too is, so if you think about it this morning, so let's review your trade, because it's actually pretty important. Let me, hold on, 30 minute, hold on, sorry. So yeah, really what I see part of the problem maybe with your earlier trade is that, and we actually described this earlier today too, pretty good. Hold on, sorry, I'm all out of whack here. Is that you have to also pay attention to chart, like the pattern of the market prior to, right? So if you think about today, and the market went lower than that, what did it go down to? The daily 50 SMA, is that what that is down there? I think so, yeah. All right, so think about it. The market went from all the way down here, the daily 50 SMA, all the way up to the 30 minute 50 SMA, right? So you essentially bought long on the first 1 minute candle to break the 50 SMA after the market coming from a price of $684 all the way to $693. So essentially the market appreciated almost $7 a share, give or take, without anything too serious of a pullback. So the best way to really think about it is, oh wow, so the market was in a bearish move. It then bounced $7 all the way up to the level that dictates whether we can kind of go bullish or bearish or whatever. And now I'm getting long on the first 1 minute candle that goes over it. there's no back test yet. So it's just one 1 minute candle over an SMA algorithmic level on a stock chart after a $7 bounce and no back test yet. It's kind of one of those scenarios where I explained today on the stream, hey guys, we're coming into the 50 SMA. In theory, the market's getting positive, but we also had this mega bounce all the way up into that level. Generally, you kind of need to give it a second to maybe back test, blah, 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 right? You know, so the market already made a large move into the level, right? So maybe sometimes give it a second to adjust. But anyways, so that's all I see there was that you're just maybe a little early, maybe not giving enough credit to what the market had already done today, a $7 bounce into your level. So the market had already been going long for a really long time into a level that can dictate more long. Sometimes you need to let it pull back or back test, right? So, so now, right? Like we said before, you have the 1 minute volume weighted average price right here. The market will pull back to that. You look for a bounce and continuation into it. So the market comes into it, we bounce and we continue. The market now slides, fails to hold, and now we're going under. Everyone buying long near the high of day, and all of this is now underwater. They could cause a cascade effect. Not saying they will, but anyways. It's not that looking at a retest is necessary. Well, yeah, it's not that looking at a retest is necessarily better. It's just that these are just the market functions, right? Things break out, they pull back, they back test. Sometimes things break out, they don't back test, right? So in any sort of, and so really, I guess it comes down to is understanding that markets can go up, they can go down, they can break out without back test, they can break out with back test. So when is something more likely to back test? When is something less likely to back test? Those are things you pick up on. But yeah, so again, just for me today, when I saw that the market had bounced $7 all the way back to here, my first instinct is, oh, the market's going to go over this SMA and the market's just going to blast off long. It's kind of like, well, if we bounced $7 already, does the market really want to continue going higher? Maybe, maybe not. See, now, if the 50 SMA today was priced all the way down here, say it was down here, right? Say the 50 SMA for the 30-minute was down here or something like that, and then we broke over here, I would be like, well, the market's only bounced like $1 or two, and now it's breaking out, then maybe it has more room to go, all right? See, what I'm reading this one is I'm reading this one as the market is really just, or the market really just went for a 50 SMA back test today. It so far maybe got a little ahead of itself. We've broken it out. And clearly, it's not enough to keep sustaining. Like, it might want to backtest the 50 SMA again. So, like, the worst case scenario is that everyone getting long over the highs, myself included, we get swept all the way back to here because the market has already bounced $7 to here and then another $3. So, it basically made like a $10 move. Is the market really ready to keep going long after $10 up without a back test, maybe? So I'm kind of leaning like, yeah, we might end up pulling this thing all the way back down to the 50 SMA again. But yeah, so, you know, we'll see. Yeah, so what was I gonna say? VIX, bring up the VIX. So, or well, hold on, let's not bring up the VIX, let's bring up the QQQ. So remember, why are we looking, like, why was it that we thought the market could have resistance around here? Remember, it was the NASDAQ not being in an uptrend. Remember we said that? The NASDAQ. So you can see how we're using two different trends to predict the markets, right? So not only are we using the S&P 500 trend, we're also using the NASDAQ trend, right? So if you think about it, we essentially use the SPX 30-minute trend here earlier around 10 in the morning to basically break the market up in a way that we could continue trading it long. We then took the S&P 500 up along with the NASDAQ until the NASDAQ got to its 30-minute resistance trend, at which point we used the NASDAQ's 30-minute resistance trend to top the market and pull it back, right? So we know that if the NASDAQ starts to get over 627.60, that will be a new break spot for the NASDAQ to kind of take things higher, if you will. So that was kind of interesting. Not only do we use the NASDAQ to top it there, but I think right now we're currently using the volatility index trends. Is it this one? Where did it go? That's weird. That can't be right. Oh, there it is. That's weird too. Huh. Is it this? Must be. All over the place, it seems. Index. Yeah, so anyways, that's that. That's a bunch of that good stuff. 11 o'clock. Holy schmoly. It's 11 o'clock, and what do we have to show for it? Nothing. No, I'm kidding, a whole lot. We've done a really good job today. We've once again predicted the stock market very, very, very well today. Because we woke up this morning and in the pre-market session, we said, we expect the market's probably going to go up. We think it's going to go up. And then it went up. And then we've kept everybody on the long side of the market pretty much all day long. And that's been correct. So that's another good day. We can't complain here. Can't complain. But there is one other thing I was just thinking about. And that is... Actually, I don't know what that is. What was I going to say? Oh, yeah. I wanted to talk about the stock right here. Yeah, so I just wanted to show everyone this play. Not that I did anything with it, but just re-emphasizing everything we've already been talking about today and everything we kind of already preach, right? So really, if you're still in here, right? This is kind of geared towards a question you just asked, like, should you wait for a back test? Should you not wait for a back test, right? So the same system that we use for the S&P 500, same system we use for penny stocks, right? So what do we have here? We have the stock SW or SWVL, whatever, right? Some random penny stock popped up today. Now, look at where the 50 SMA is at, right? Look at where the trend is at. 50 SMA right here, okay? And in the pre-market, whatever, call it that, those two lines, right? So let's go look at the pre-market session for this stock, all right? So if we go into the pre-market session, we look at a 1 minute. What do we see? The market broke out, right? Then it faded all the way down. Where to? The uptrend start level. Bounce. Double bottom. Bounce. And now up 12% off that low. So, when you talk about waiting for a back test, again, it's not that everything will back test. It's not that things are, it's not that it's always going to back test. It's just understanding where the uptrend start level is, right? And knowing that, right, if it's going to back test, where's the back test level? We know that the back test level is arguably all the way down at $1.94. So when I wake up this morning, I look at this penny stock and it's all the way up at $3.17. And then I go, well, where did the uptrend start? And I see the uptrend start at $1.94. I know that I would be buying a stock that's elevated over support by 38%. So either the thing just has to keep going or I run the risk of a 38% decline before it even reaches a meaningful support level that may bounce the stock, that may allow it to recover all the way back to the highs. And then if in the event it doesn't, then it just maybe goes into a downtrend eventually, right? So this is a perfect example of a stock that explodes pre-market on an uptrend, right? And then, ultimately opens up and sells off all day through the pre-market and then into the open all the way down to where? All the way back down to trend support. And then from there has a 12% bounce. So it had a beautiful trade. Like, even though that doesn't look great, it's still about a 10-12% bounce on a stock, right? So if you could deploy some money on the day and get 10% return on your money, that's not bad, right? It's pretty good. But it's the fact that it had to sell off 40-something% before the 10% trade became valid. All right? So yeah. Let's see. Oh man. Well, appreciate that, Bliss. Bliss up, fam. Alrighty. Well, I don't really know what else to do. Yeah. Penny stocks are garbage. Actually, let's check the Russell 2000, because if the Russell 2000 starts to go positive, that's when we're going to start having some fun penny movers again. So Russell 2000 until it gets over the price of, I don't know what. Actually, it's just trying to now. So the Russell 2000 has just creeped over the 50 SMA, so it's made it back to. Cheers, bless. I'll catch you on the next one. Yeah, so it looks like the Russell 2000 is getting back to some interesting levels. If it gets some activity over the 50 SMA this week, then we'll probably see some penny stocks do relatively decent this week. So might be some traders to get in on over the next couple of days. You know what I'm saying? Yeah, but anyways, I think we'll probably end today's stream right around there. I have some guys starting some floors in the house tomorrow, so I'm assuming it's going to be loud and a lot of banging going on, so I don't really know how fun a stream's going to be with a lot of loud noises, but we'll probably start one, and if it gets a little too hectic, then I'll probably just end it. Might even start some streams earlier this week before some people come, things like that, so... and then I'm going to be out of town for another week. So pretty much just expect it's for the next 2 weeks is going to be hit or miss with me streaming, but I'm hoping probably after the next 2 weeks, like I said, I feel like I've been saying that for a couple weeks now, but probably after the next 2 weeks, things will start settling down over here, and then I should be back online, like full streaming, fully at it. Just got to get it through a couple more weeks of construction and whatnot and have you, and then we'll be good to go. So anyways, cheers guys, have a good one, and we'll get to the next one.